Okay. Okay. Hello, everybody. Good morning.
Morning.
Or good afternoon, because everybody's time is different. Um, I'm Jessa. I'm a credit specialist and business credit specialist. I do both, but right now we're focused on credit for people to qualify for homes. I've been doing this for 4 years. I've been in the financial industry and I've been doing it for 4 years, and I really love it. So I love to educate people and show people the way to be able to build their credit successfully, to be able to get approved for things, be able to little tricks here, tips in there to help them to grow their credit. But if you don't listen, then you don't follow through, then your credit will not be good enough. but yeah, if you follow through, everything will be good. Just listen and watch and learn some good stuff, some good trips and stuff. All right, here we go. All right. The number one thing is why having good credit score is important. Why is it important? It shows companies, right? Whether you can show that they can lend to you. Number two, will determine what interest rates you will get on any loan, because remember, your credit is scored by any loan or anything that you're trying to get out that's not your income, basically. So loans, anything, credit cards, car loans, all so much different things. Credit is everything. I'm always say that. Okay, so number three, landlords will check your credit score. Some will, some won't. But the ones that really have nice homes and pretty kitchens and pretty all of that, they want to make sure that you can be able to be reliable on your credit, because your credit tells you everything. That tells you if you pay on time, or if you're paying late, or anything like that. Okay, so that's what landlords do. They love to check their credit. Those are the ones that, with the nice houses and kitchens. Okay. And number four, utilities. Most big thing: phone, electricity, water, sewer, cell phones. Like a cell phone, I'm gonna say that example because when I switched over my cell phone bill, I was with AT&T and Verizon. We didn't have to pay nothing up front because our credit was good. How great is that, to be able to not pay upfront costs or high interest rates with perfect credit? Why not, right? Okay, number five, home purchasing, refinancing. There's a lot of people want to home purchase and refinance their home, but they can't because their credit's bad. So that's what I'm here for. I'm here to help you build. I'm here to help you get them debts removed. I'm here to get you positioned and to be able to be a homeowner. So how beautiful that is, right? Okay, number six, buying a car you want. You could go to a car with bad credit. You will get high interest rates, but I promise it won't be the same car you'll leave with that you want. They will put you in a car that you qualify for, and they will hit you with a lot of inquiries to qualify for that car, because they're trying to find a lender that will lend that money to you to be able to qualify for that car that you want. So it's going to give you high interest rates because they don't trust you, because your credit's bad, stuff like that. So buying a car, if you want to buy a car, I always suggest go to a credit union. Never go to a car lot. Go to credit union, see what you qualify, find a banker that will qualify you for that car you want, but make sure your credit's good too, because they're still going to go off your credit. But that's the best way than to be able to be going to a car lot and getting like 25 inquiries. So that's my little thing. So I really suggest to do that if you guys are looking into buy a car. All right, let's go to the next slide. All right, this is my number one. We'll break it down to you all at once. It's through mortgage rates, auto loans, credit cards, insurance rates. So if you look at the credit score. If your credit was up to lower than 620 for a mortgage, you see what the cost is going to be. So if you look at the grid, you can see what you qualify for and what you are going to pay for and the rates. So as you can see, with great credit score is lower rates. So so you just want to monitor that all the time and always monitor your credit. All right, let's go to the next. All right, this is how is your credit score calculate. Very important to understand that because a lot of people don't understand what makes their credit score up. And this is a breakdown for you guys. This is 35% of payment history. Remember, payment history is your big thing. That's what a lot of people fail at. That's why their credit score goes down because of payment history. One-time payments versus delinquent last 24 months more important, more important. That's a big one. And then your credit utilization, percentage of credit limits available, what you're using. So you don't want to go over utilization over 30. I say 25%, but 30% is just like the limit. But I say 25%. If you could keep it down to 16% to even 5-6%, that will boost your credit. But keep your utilization, credit usage low, and don't use over your credit limit or your credit cards. Okay. And then the length of credit, 15%, that makes part. So it's depend how long your credit is, how long you're established. Like what I had read on something about 10 years can make you an 800 credit score. 10 years of positive credit where you're paying your payments on time, you're paying your credit cards on time, you're paying everything on time. That's what's going to qualify for you to grow your credit. Like I said, credit history is 35%. So imagine you had 10 years of positive credit, mix of credit, because remember, mix of credit is a big thing too to help your credit score go. So your debt ratio too, all of that, it all calculates. So imagine you have that 10 years of positive credit, your credit score will be up to 800. So that's a little tip. Also, we have the 10%, making 10% of your credit, new credit inquiries. So that's like I said, when you go to a car lot and they hit you with those inquiries, that's what brings down your credit score because it could bring up to 60 to 90 points depending on how hard it is. So yeah, so the number of inquiries, you always want to make sure you don't have too many. Don't open too many credit cards. Don't open all that. If you don't need that and can't really afford it, I really suggest you not to open them unless you don't have any credit open or anything like that. Then you would think about a secure credit card just to let the lenders know, or any credit card companies, that you are reliable of managing your own money with your own secure credit card. So that's a tip right there too. Okay, and then 10%, calculating your credit, types of credit, installment loans versus revolving. So you got to know what your installment loans and your revolving. Your installment loans will be like loans, big loans, mortgage, anything like that, car. Your revolving is more like credit card, little loans, stuff like that. So yeah, this is what's this is very important to always remember. This is what makes up your credit score of equal of to what it is. So remember that. Okay, next slide.
That's a quick question right there.
Yeah.
What do you think is the biggest mistake people make in these categories that affect their credit negatively? Which one do you think when you get a client, like I have a credit, when you see their credit,
Payment,
and what is
payments,
it? Is
payments,
payments, late payments.
payments. That's what makes them down, because once you have them late payments within 160 days, once it's late, it goes to collections. So when you don't pay a late payment, that drops your points to like almost 100 points. A late payment could do, and that's why.
So
Huh?
So we are talking about two different types of late payments. We're talking about a late payment that people, oh, I forgot to pay my car. I will just pay it next month and the car is late 30 days. Like that is one late payment. People will be thinking, oh, but I pay, it's fine. No, it's not.
No,
You
it's
are
still a
late.
late
That's gonna
payment, and
check
it's
your credit.
yes,
That's
and
gonna hit your credit
bing,
score.
yep, it bings your credit score as a late payment, and it drops your credit score.
Yeah,
So
but
the
Carmen, I paid it. I paid it the following month altogether. You
mm,
were late.
yep, you were late. You were late. So the
And then we're
best.
talking about another late payment. The payments that keep going on and become a collection. So people
Mhm,
continuously miss that
mhm.
payment, right? Like, oh,
Yes.
1 month, 2 months, I just won't pay it. And then it becomes a collection.
Hmm.
Okay, so regarding the collection, something that I have seen very often when I pull credit is that people have a collection for $20, $50, $70. And it's like, how you let this happen? Most of the time, it tends to be that they open a credit card, they didn't know the credit card had like a pending charge. They thought they closed it by paying it off, but there was a recurrent monthly payment associated
Mhm.
with that card. People
Mhm.
stopped taking care of that card, and then that recurrent payment or that little balance when accumulating,
Mhm.
accumulating interest until it became a collection. And people are like, well, but there it was only $7. Like, who cares? Well, that $7 affected your credit is bad. Now
Yeah.
it's $7 and you have a collection on your credit.
Yeah.
So,
A lot of yeah.
would you recommend I guess that people have at least the minimum monthly payment as an automatic payment so they avoid this kind of thing from
Yes,
happening?
that's what I was gonna say. The best thing for a client to do is to make automatic payments. If they can't remember to pay their own, due date payment, they I always suggest automatic payments, or even adding it to your calendar, or getting an email alert and adding it to your calendar. That's something I do. But it's good to yeah, it's good to add it as an automatic payment, so you can always make sure at least it's paid. I mean, it's gonna boost your credit because it's gonna add positive history because you're paying on time payments,
Uh-huh.
and that's, remember, 35% of your credit. So it
Mm-hmm.
will help if they automatic payment. But not a lot of people like to do that because they're like, oh, I don't want them to take my money, but you owe them. That's that If you're
It's
gonna
not your
borrow from
money
them, you
anymore.
owe them.
If
Yeah.
you owe that money, it's not your money.
Exactly. You got to pay that back, whether you like it or not, because you're borrowing it from them. Because just like if somebody gave you $100, like, here, borrow it, but pay me back. The way I gave you the $100, give me give me the $100 back. That's all that
So
matters.
I am not judging when I'm saying all these things. I this is
Me.
on this is from a place of caring
Yes.
and understanding. Like I get it. Like I have, I don't know, 3 credit cards and they all close on different times of the month.
Yes.
So even if I wanted to sit down one day and pay them off, I actually pay off my credit cards every month. But even if I wanted to sit down one day and pay them off, it wouldn't work out because they don't close at the same times. Like the mortgage is due at certain point in the month. So some bills are due in some, different days of the month. So sometimes when I sit down, one bill is gonna um be issuing 3 days. So I still don't have that bill to pay it off. So actually when I moved, one
Mhm.
of the utility bills is in the same account as my previous house, but they bill on different times. So I
Yeah.
receipt one date of the month, which is today, later, and
Mhm.
I pay all my bills, but that bill is never ready when I'm going to pay. So I missed it 1 month. Not
Oh,
to, it is late, I'm late, I don't have any lates.
okay.
That's what we're talking about credit. I have good credit. But I missed it to the point that it was like I paid it like on the due date or something like that. And it was because I didn't pay it at once. Like I didn't sit down to pay that bill. Now I have a calendar for it.
Mhm.
But I have scheduled automatic payments for that
Yeah.
bill because I
Mhm.
know that bill is never available when I am paying my bills. It's just not there. And then it's really hard for me to schedule a second time of the month to check on all the bills. So the best idea was just to schedule an automatic payment. However, here is the thing. Even though you schedule an automatic payment, like I did, you have to go and check that that payment went through. So that is
Mhm.
two things. One, that you have the funds to cover that payment. So whatever bank account you're associating to your automatic payments always have to have funds. Because if not, you are assuming that payment got made, and guess what? It didn't. is bouncing. You are getting
Mhm.
emails that say this payment didn't go through, and you are just not worried about it because you have an automatic payment. So automatic payment, it also requires the work of checking, this go through, still all good. The checking account that I have associated to this is all working and good. All the payments went through. So I believe to have good credit, you have to put in some work. It's not
Yeah,
some
you got that right.
given
That's you
thing, or you
got
are
that right.
entitled to have a good credit. No, the credit talks about you and your financials and your responsibility and the way you assume debt and meet
Mhm.
your obligations, because it requires work. Everything that talks about who you are will
Mhm.
require work. Credit requires work, but there is rewards. The fact that you can get a lower
Yep.
mortgage rate, that means,
Mhm.
okay, you're getting rewarded for having good credit. The
Yes.
fact that you can get a lower mortgage insurance, it means you are getting rewarded because you have good credit. An
Yes.
auto loan, I have auto loans that I compare my payments to clients that I get that have balances about the same that my car loan, and my payments are super low. And that happened because of the credit. I have good credit.
Yes.
I have worked on building that financial profile by
Mhm.
putting in the work. So it is very important to clarify that you're here to help us as a credit specialist and give
Mhm.
us recommendations, right? Now
Yes.
you're breaking down how is this score calculated,
Yes.
but it requires work. It's not
Yes.
like join my program, it will be all done. This is
Mhm.
something that it would require you with our guidance and education to do some work to get the score that you want, to achieve the things that you want to achieve, such as
Yes.
buying a home.
Mm-hmm. Yes, exactly. Exactly. See that's another thing when you do buy a home, another thing, go to creditreport.com. Creditreport.com is a free where they print out your whole credit report for free. You get it once a year,
Once a year. Mhm.
once a year, and you'll be able to go show the mortgage lender if it's the same day, at least it has to be the same day. Show them like, look, I pulled my credit report. Can you run my numbers? Because if you pull it, sometimes, depending on what mortgage lender, you get a little thing in your credit report. So sometimes it could hurt somebody's score if they have too many. Even if it's a soft inquiry, it could sometimes little bit of damage because there's too many of them on there. So
Yeah,
I
so
don't
it
know if
is
you
very
guys.
important that people don't allow people to be running their credit, especially when you're trying to buy a car. I have seen this a lot. People that went to
Mhm.
apply for a car loan, sometimes they don't even buy the car, but the
Yeah.
car lot ran their profile by
Mhm.
6 banks, and now they have 6 different inquiries.
Like
Different
15.
though to mortgage. When you pull
Yeah.
your credit for mortgage, most people say you have 30 days to shop around. I don't go by that rule. I go by the rule of 2 weeks, because my personal experience was that I pulled my credit within 21 days and I got a second inquiry. So if you just do it once, you just get during those weeks, you just get hit once if you even do it multiple times. But I don't say 30 days, because if your month cuts, it will be a new inquiry, and people tend to say, oh, you got 30 days. No, you don't. Like, don't do that. If you're going to shop around, shop within 2 weeks, go to different lenders. That is okay. See who explains best, who educates you, who is willing
Yeah.
to help you, who is giving you fast response, who is giving you
Mhm.
clear communication, who, when you call, is there. Like, do all those things. Be like, okay, what these lenders can offer me, and then from then decide who you want to work with, and that's okay. But just don't allow more pools just chop within those 2 weeks, because I want to take care of my client's credit.
Yeah.
Um, what I do is I examine the whole application prior to pulling credit. I
Yeah.
like to check the income. If I already know the income is not going to be enough to qualify, I don't pull credit, because I don't want to damage the credit
Yeah.
of the client when I know the application is not going anywhere. Many lenders I know, pull credit just to tie down the client, like, oh, I got your credit. I don't do that because my
Yeah,
interest is in helping people, not destroying their credit and their ability
yeah,
to shop. And I know the better the credit, the better the terms of the loan. So I
yes,
don't want to damage that. I don't want to cause inquiries that then in underwriting we're going to have to explain. So for that, it is important that, you're working with somebody that cares. But
yeah.
the person that has to care the most is you.
Mm-hmm.
Nobody can care more about your credit than yourself.
Yes, exactly. Because you're not gonna sit there and just hold everybody's hand to make sure. But you can do too much. You could do so little, but also you have to listen to when somebody's giving you advice of how to go about your credit, because if you don't fix it, it's never gonna get fixed. You don't have to wait to 10 years till things fall off by themselves. And then if you ain't got no credit established, that's a waste of 5 or 10 years of your life, of your credit life, because if you don't want to open your credit or open, try to establish some credit. And I'm telling you, a secured credit card is like the best thing to go for when you don't have any credit or you can't get approved for any credit cards to help grow your credit score. We can
So
get.
you offer secure credit cards.
Yes, I offer secure credit cards, a very fast building credit card too.
Mhm.
Secure credit card. It reports to all the three credit bureaus. It reports to Experian, TransUnion, Equifax, and I have a few. Actually, I have a multiple clients that are on there and that are using it and that are getting very good success because they're following my directions. I mean, I could tell somebody, oh, you need a secure card, let me provide you it. Some of them go out and go get a Capital One. A Capital One credit card, secure credit card ain't the same what I have. What I have is going to help you build your credit faster because it reports to all three credit bureaus, and every payment you put in that system, it reports to it. So why not? Why not listen to someone that experience and knows what they're doing to help you to generate your credit score so you can grow that payment history. Payment history
So
is
this
35%
is how
of your credit.
this is how I see it. When you give somebody the information and the education, then
Yeah,
the only thing that person has to do is take action, and that is gonna um depend on the person really wanting to achieve this. And achieve this, I not only mean like, oh, I want to fix my credit,
yeah,
but oh, I want to buy a house, I want to buy a car, i i
yeah,
I want to get as a job where it's required that you have good credit. Like that could be it. Like whatever it is your goal and why you're trying to raise or build your credit, it will
yeah,
require work, but you have people that are experienced, that have already done it, that
yeah,
help many, many families. Like in your case, you help people all around the United States, like to fix their credit. So if you have somebody that's an specialist in something and they're telling you, this is how you do it, this is what you need to do, here are your steps. The only thing left is following directions. So do you really want it? Because we're giving you the way to do it. We're not promising time, right? It might take some time, but
yes,
it is a process. And if you're willing to put in the time and work
yeah,
towards your goal, then you will have support to do that. I
yeah,
get a lot of clients that come to me and they're like, yeah, yeah, I want to buy a house, but not right now. So when? I don't know. I will apply when I am ready. But how do you know you're gonna be ready?
yeah,
You're gonna be ready when you want to actually pull the trigger. Your credit might not be where you need it to be. And if it is in a level where it is eligible to apply for a mortgage, it might not be in a tier where you're gonna get good terms or
yes,
you're gonna get better terms. So
mhm,
wouldn't you want to be in the best position you could ever be when you're trying to achieve whatever it is your goal? Buy the car, buy the house, get the job. So you don't wait to fix
yeah.
your credit. You fix your
Always
credit
buy a
now.
house first.
Work on your credit
Mhm,
now. Like you
mhm,
need to um be like, I have a 620, I have a 580, I have a 450, I have a 640. You know what? There's up from that. There's a lot higher credit score. So people really need to get on it right now and be like,
Yeah.
I want to know where I am, pull that free credit report and say, you know what? There's better. There's 800s. Why not?
Mm-hmm.
Why do I have to get 620? Yes, I can buy a home, but maybe when I buy the home now and when I refinance, I have
Yeah.
a 760 and I can get a way better interest rate. So
Yeah.
the time to work on your credit is now. When you want to buy a home, you don't wait until you're like, oh, I'm ready to buy. No, you
Yeah.
check in with me with your documentation, with your employment documentation now, so I can tell you, you know what? Maybe income is not enough. Is there
Yeah.
any way we can add a co-borrower here? You know what? Maybe income is just not enough to buy the house. Is your level of debt what prohibits you from buying the house? So what
Yep.
about we work on that debt? We don't consider the balance, we consider the monthly payment, but the monthly payment tends to be tied to the balance. So maybe that's something we can improve so you are able to qualify for the house you want, not just for um a house. So you don't wait to do these things. If you
Yeah.
have like the desire
Exactly.
to do these things, you do
Mm-hmm.
them now. You seek help, and when somebody asks you, I need your information in order to help you, you provide your
Yeah.
documentation because that will show that you want it, and that's the only way for the people that are experts in their areas, like you on credit, like me on mortgage, to help people help themselves because
Yeah.
this is what it is.
Yeah. See, yeah, that's that. Yeah, exactly. It is very important to start growing your credit if you want to become a homeowner within a year, 2 years, 3 years, 4 years, because they don't know how long in their credit process will take to get repaired. And especially credit, like I said, credit, you can't say, oh, I'm gonna fix your credit in 30 days and that's it. No, you can't do that. So, people got to understand that if you want to buy a home or a car, you got to start working on your credit now. Don't wait, because you don't know how severe it is and how long it could take the process to get it repaired and start growing. Because remember, payment history takes a while. Look, 10 years to get an 800 credit score, that's pretty long. You know, that's not easy. 800 credit score. So,
No, and I think the hardest thing about credit is that it's so hard to build, so
mhm.
easy to destroy. Like
Yes. You know what?
one
That's
late
so
payment,
true.
that
Mm-hmm.
one late payment, it can ruin
Big
everything you
points.
did. And you might be like, oh, but I paid it the following month, it's fine. No, it's not. It's not. It's not fine.
Yeah.
If you
And
have an
all,
obligation, you
mhm.
have to meet it on time.
Yes. Yes.
Timely payments. That's the
Yes.
key.
And always remember to know what your statement is, because your statement is when they report to the credit bureaus, when they report to Experian, Tragedy, Equifax. So you got to remember what day is your statement due on, and always pay before due date. Never pay on the due date, unless you're in an automatic payment just because you have problems or kind of remembering to pay your payments, then that's fine. But always to do pay 3 days before. It's help your credit score grow. And there's a lot of ways you could trick the system if with two payments. If you do 15 days before the due date, half of it you pay, and then the other half 3 days before the due date. That tricks two payments in the system. So that's really good. That scores you two payments. That's a trick right there for you guys. So if you guys are, looking to grow your credit, let me help you. Let's guide you. Let's get you started. Let me show you the other side so we can get and talk about more other stuff that you for your credit. There's so much of it that we need to learn, and I need to educate and show you guys so you guys can understand and get a good feel of what your credit is and what it makes of, and you understand it. All right, next slide. Building and improving your credit. A lot of people don't understand how to build it or improve it from it being so bad. So building your credit. Easy. Secure credit card. They don't credit check you. There's some do, but there's some, most of it, 90% don't credit check you. There's a limit you got to put down. but that's fine because it's your money. You'll get it back when you're done using it. Credit builder card, those are really good too. Become an authorized user. If you have a significant other, a mother, a dad, somebody that has great credit, you want to be added to their credit, but you got to make sure they're on their credit and they're on their payments and they're doing is good too.
That
Because
is very important. It cannot be
Mhm.
just anybody. It has to be
Yes.
somebody that has good credit.
So if you somebody added you and their credit was bad, your credit will be bad too. So you don't want that. You're going to get a ding on your credit if they get a ding on their credit. If their credit score drops, your credit score drops. Because when I have my significant other as an authorized user, and when my credit goes up, his credit goes up. So it really helps, but you just got to have the person that you're going to use it from be a reliable payment person, paying their payments on time, utilizing it. Credit usage is important still too, keeping it, good. So that's a good thing that you can do is add it and become an authorized user. Okay, so next one, add your house payments to your rent, to your credit. Nobody knows about that. You can add your mortgage payment, your rent payment to your Experian. Experian is the best. Experian offers so much FICO raising, but never use their dispute online. Anyways, but yeah, they have good ways that you can add your Netflix, your Hulu, um, all of those little payments, the little TV payments that
Utilities, yeah, utilities. I see that all
utilities,
the
all
time.
of that. But a lot of people don't know about Netflix. You can add, and a lot of people don't know about Hulu. You can add Disney. You can add. A lot of people don't know that. My significant other has all of that, and he puts that on his, and it helps build his credit history. And that's
Yeah,
what.
but we go again. You can add all those accounts, right? But you have to have timely payments. If you
Yes,
add the accounts and you have late
yes,
payments, you're
yes,
gonna damage it more than fixing it. So
yes.
the timely payment things is very important.
Yes. And you want to always make sure you are paying your payments on time, especially if you're going to add Netflix, make sure that payment history is good. If Hulu, make sure that payment's good. Don't add any payments on no trade lines on there that you are struggling with or have bad credit with or just not paying it, late payments, anything like that. Do not add them. Just add your positive accounts. That's the best thing. Another one, you can add your positive payments to your Experian. Like I said, you can add, all your Netflix and stuff and anything like that. And then your personal loans, you can add that too. Which we do is how we have our debt relief. It comes into a loan after a while. We add it to your credit report. Every payment you pay, we report it, and it helps your credit score. So, but you got to remember, you got to pay your payments on time and be on time, because if you're not on time, it's going to ding your credit, and it's going to mess up your, of getting loans, because you'll have a saying no payment or late. And another, to proving your credit, most thing is approving your credit. A lot of people don't understand when their credit is bad and they need to improve it and get it back to normal. Improving your credit, there's a lot of ways that you can improve your credit. Monitor your credit. That is number one. Always monitor, make sure everything's accurate. No error, no bad, stuff that's not correct information is not on there. Because if you old addresses too, that's one thing too. You can update your old address before you go in the credit program. Update your address, and then we can start disputing your items, and then your address will be up to date. So you won't have to have your old addresses for your other collections. That's another way too you can do. Always update your address before you do credit repair. But always monitor credit use, monitor your utilization, monitor your debt, monitor your inquiries, monitor all of that good stuff that you need to pay attention to.
So I think
Also,
people should set one day in the month to just do this. Like,
yes,
this is my day to
yes,
check on
that's
my
my,
credit, check that everything
yes,
reported on
every month,
time.
yes, that's what
Yeah,
I
one
recommend
time a
once a
month,
month.
sit down, check your credit.
Or if you
Check
get
it.
alert,
You can you can check on like Credit Karma
Mhm.
or the bank
No,
is
no,
offers you.
no.
No,
Credit Karma, no. I don't like Credit Karma because it gets to your advantage. It just gives you idea where credit score is because I have a lot of clients that like to look on Credit Karma. Oh, my credit says it's six something, but experience says five something. Like Credit Karma
yeah,
just gives you.
for me, I sorry to interrupt you, but for me, like I don't check it like for a mortgage, and when somebody's like my credit card score 700, and then I pull it and it's 640 for the FICO for mortgage. But at
Mhm.
least it gives them an idea of
Yeah,
I use
but
it,
it gives them
like
a
what
way
accounts
higher
are
idea.
being reported. Like that is a good idea. Or how many inquiries do I have? And it although it doesn't update as fast because I have had mortgage like payments for 3 months and it never hit the Credit Karma. Like it hits way late. But it at least gives me an idea of what is there. I have people that have accounts in their name that are not
Mhm.
theirs, like very common names, like Jose Garcia. And it's like, oh, that's not my account. I don't owe that. Like that wasn't
Yeah.
for me. And then they dig a little bit up and it wasn't their account. So they have opportunity to review with a credit specialist. This is something we can get disputed because this is not my
Yeah,
account.
yeah,
I
because
didn't
it's
do
kind of
that.
like identity theft, basically. If it's not his name on his own credit report, either somebody had opened something up, or maybe they opened in his account and they put similar to his
The
name.
response that time was a clerical error that time. A
Okay,
very common name at the medical, it was a medical collection. At the medical office, they had added somebody's debt to this client because they had the same name.
that's why I
So
told you
it
it's
was a
always.
clerical
Mhm.
error.
That's why I told you it's always good to check your credit report, monitor it, because look, it like you said, it was a wrong error on there. That's the example what I'm talking about. Monitor your credit because you never know. You could get an email saying you have an inquiry and you're like, wait, I never opened an inquiry. There's a lot of things going on, and we help with identity theft too. So, if you have that problem or anything like that, we help with that. And we have, letters for that to help dispute it, and we could report it and get it disputed. That's what we do.
Before
We
I
usually,
forget, and I will let you continue, but maybe later when you have opportunity, you can talk a little bit more about something people can do to prevent identity theft. I've seen a lot of people are very safe word their
yeah,
documentation, like, no, I won't give you nothing. We have to meet in
yeah.
person. That's okay. But
Mhm.
some other people are like, oh yeah, I carry my social security card in my wallet like and I lose
Yeah,
it
you're not
often,
supposed
something
to.
like
That's
that. So it's like,
yeah.
what maybe you have some recommendations about like how would do we go to prevent identity theft? Like what some are the
Keeping it
things we can
locked. You could keep your credit file locked. You know that, right?
do? I have mine locked.
Yeah.
I forget.
So
I forget
yes.
about that.
So once you lock it, nobody could get your stuff. Nobody could use your identity or anything. That's why it's very important. Experian offers that, but I think you have to pay for it. I'm sure of that. But I mean, it's worth it than losing, money
Your
over
life,
somebody who
your
uses your credit
your
card. Yeah,
life.
and your life too.
Identity
Exactly.
theft can ruin your life. Like
Yeah, because yeah,
that's
because
a big
I
thing.
had clients that were in identity theft. It's nothing new that we haven't did. What we do is we report it. They call it. We report it to the to the basically we do a report, and then after that we start challenging these items. Like, look, we have a report. This is not the person you are going after, and you are going after the wrong person because this is identity theft. And then they have to remove it because we have proof. We made a report. So that's another way you could do for identity. We do for identity theft. So, and you get up to 1 million in fraud. So if anybody ever, you're in my credit program and somebody got into your credit card or got some money over $1 million, well, up to 1 million, maybe like 100,000, then we have $1 million insurance for that.
That's really
So
good.
Yeah,
The
so
recommendation you gave about going to the credit union for the car loan instead of going to the car lot is also a good recommendation to avoid identity theft. You're not gonna
mhm,
be giving your social security to the salesman. You're just gonna come with your approval from your bank.
yes.
So that's gonna avoid that a bunch of people have your social security and all your information that is needed to pull credit under your name.
Yes, yes, exactly, exactly. So that's very important. Number one, that's why I added it to number one, monitor your credit, because a lot of people don't monitor their credit. Believe it or not, I have clients that ask me, I haven't checked my credit in 5 years. Like, what? Yeah, there's people out there that just don't want to look at their credit because they know it's bad and they just don't want to look at it. And I'm like, how are you going to fix it if you don't look at it? You have to be able to monitor. It's very important. What if somebody steals your identity? How are you going to know? That's why a lot of
No,
identity gets stolen, because people don't want to look at their credit because they're just so scared of what they're going to see of their credit score. But don't fear your credit score. You can always repair it and fix it. It's not going to be overnight fixed, but it's going to, at least you're going to make that progress to do it. So why not, you know? It opens up so much doors for you, so why not?
yes, that is right.
Yeah. So I say improving your credit, good payment history. Second one, most important, payment history, make on time. Number three, pay bills on time or before the due date. Simple. Pay before the due date. Credit usage. Keep your credit usage low. I say 25%, people say 30, but I say 25% because it's better and it's lower. Um, your credit utilization low. Keep that low too. What you're spending. Credit, your credit cards, you want to use only 25% of that limit. If you have to use your whole limit, just make sure that payment is not due the next date, and pay it as soon as possible before your due date and your statement, because then it report that you use that much of income. So you could use your whole limit, but you got to make sure you know your due date and your statement so you could pay it back before it reports.
Makes sense.
Okay. So another question to build improving your credit. Use your credit cards every month to grow your credit history. Keep credit usage 25%. A lot of people don't use their credit cards. They're like, I'm scared to use it because my credit score dropped. You're not building any credit history if you're not using it. Remember,
Um, you don't have
35%.
idea. You
Yes.
don't
And
have idea how many people come to me. They have savings. They have like they have the income. They have everything. But it's like, what about your credit? I don't have credit. I don't like that. Yeah, but the system is designed to know if you can borrow money based on you having had borrow money in the past and meeting your financial obligations on time. So I can see how not having debt is great, but not having register of debt with on-time payments is worse. It's
mhm,
just bad because we cannot see that this is your profile. You're a person that meets their payments on time. Like you need to open a card, you need to pay, do your payments on time, you need to use the credit because we need to see some history of you being responsible with debt. If you
yes.
want that, you have to show you can manage that.
Mhm.
That's how it works.
Exactly, exactly. I mean, you got to use your credit cards. You can't be scared because it's part of your payment history. It's 35%. That's a big portion of your credit of overall. So a lot of people, I mean, I do. I'm telling you, I get clients that tell me they're scared to use their credit cards, and I'm like, just use them wisely, you'll be fine. Know your due date, know your statement, you'll be fine. Just use less than what of your credit limit. Use that 25% and pay for gas or something. Or just do something like small like that. There's a lot of different ways you can use your credit cards to keep it in the low and be able to get a
And
good
you don't
payment.
have to have 20 credit cards, right?
No, no, you don't want to open that much. I will talk about that in another slide.
Okay.
Okay, so next one. Dispute credit report errors and bad debts, never online. So what I mean by that is anything you want your bill to prove in your credit, look for any errors, dispute any bad dispute collections, increase, and that is bad on your credit report. You want to dispute those. That's what's going to help you improve your credit. And never do it online, because if you do it online, it waives your right for your disputing process, and it takes a longer process. Because once you go online and try to dispute from like Experian, they trick you. They say dispute this online. No, don't do it, because you verify that debt is yours, and when you do try to dispute it, it's yours, and it's hard to dispute off. It's a process, but it could be done. All right. So, and it's a longer process. So you'll be in the company for a minute. So never dispute online. Okay, and the next one is credit mix. That's another thing. A lot of people ask me, how do you get an 800 credit score? Or how do you get a 700 credit score? You have to have payment history, credit mix. A lot of companies like to see you with a credit mix because they believe that that's a duo for them, and that they can trust you with anything, because you are in a, say you had a mortgage, credit cards, and a car payment, but long as you're paying all those on time, growing that positive history, that will help you get up to 800, because of you having mixed established um, trades that are loans and that are credit cards. That's a perfect match for the credit bureaus to see that you're managing. So that's why I say credit mix. All right. And then the next one, limit applying too much credit. A lot of people think just applying to like 10. Let me give you an example of a client I had. This lady texted me one day and was like, is my credit going to go up? I said, why? She said, I just opened like 5 or 6 credit cards. I said, who told you to do that? She said, some lady or some credit company. And I'm like, why would she have you open so much credit cards and you're going to have a hard time paying off? Like, what? You're not supposed to open so many. What I suggest is a good open alliance would be like maybe the max to 2 to 3 credit cards, and then have like a student loan or a mortgage or car payment, something like that you can report, and then all your other little your Netflix, all the other little things, and it adds up, and it will help your credit score grow. So never, and then you won't have so much increase, because remember
But
you're
imagine
applying.
all those inquiries. Yeah, that's what I was thinking. Like,
Yeah.
that's a
So
lot of
imagine you
inquiries.
applying for all those credit cards like that lady did, 6 credit cards. How many inquiries do you think she got hit with?
A
6
lot?
credit cards, 7 credit cards? Yeah. So she's like, I'm like, you're okay, since you already did it, I try to give her the best opinion. Just use them to grow payment history, but never pay late, because you will mess it up, and you would, just don't. And don't ever open 7 credit cards at once. That's a lot of
I,
inquiries that will hit
I
you.
think I think it is very important, when in doubt, ask the expert. Jesse, I heard if I open 7 credit cards, my credit will go up.
No,
No,
she
it
didn't do
won't.
that with me.
Like, just ask me. I'm here to answer all your questions. Even I know, being a credit specialist, I know that's not right. So I could be like,
Yeah,
don't do
exactly. Me too.
don't
I
do
even know that. Yeah, I even know that. Like,
There's a lot of misinformation online. There's a lot of misinformation on
yeah.
TikTok and on Reels, and there's things
Yes.
that are not true. There's a lot of bait and switch. So,
Yes.
I have a lot of people that send me TikToks. Carmen, look, if I only pay $1,000, I can get this house. Well, that is not how it works. They are telling you this And it normally doesn't come from a mortgage loan officer because our advertising is very restricted. It comes
Hmm.
from somebody else, kind of related to the industry. It could be
Yeah.
a realtor, it could be, but no mortgage, right?
Hmm.
And saying if you pay $1,000, you'll be in a home. Yeah,
Hmm.
but you failed to mention what is behind that. There's a lot of things that go behind being approved for a mortgage loan. First, that program might not be available for everybody, might have requirements of having a particular specific profession. You
Yeah.
have to be a doctor, you have to be a teacher, or it might have a credit
Yeah.
score requirement. You have to have a 700 and up, 640 and up. It
Hmm.
might be that you are paying $1,000 the down payment if you qualify, if you have the income to qualify for that. Or it might be, yes, you have to pay $1,000, but that's not it. You have closing costs that are about 3 to 4% of the sales price. So
Hmm.
you don't have
Yeah.
expenses. They can grab
Yep.
you with that information that is very limited and probably doesn't apply to everybody, not even most people. So it is important that you check in. I have a client that he always sends me TikToks and tells me this is true. And I'm like, well, let's get on the phone. This is this means that, that's not what it says. And it's like, yeah, of course it's not what it says there because they just want you to go with them and then tell you, oh, that's not available for you, but here's this option. Like I'm gonna tell you already, like, no, that's not it. This is
Yeah,
how it
that
was. You might qualify, you might not.
yes, I understand you completely. I had clients like that send me to, oh, I heard this happens in TikTok. I heard this helps and this. I'm like, well, TikTok has their little ways, but there's phases to those ways. They're just trying to make you follow them so they could get more viewers, but they're not telling you the whole way to do it. They're not telling you what phases, how to start. They're just saying only the main part for you to get attention. So, also, just what I said, don't apply for credit that you can't afford. It just simple as that. If you know you make $1,000 a month and you already have already like 2, 3 credit cards, and you got to pay rent still, and you got to pay all that, and you don't have the money to pay the other credit card you just
Or
qualified that you applied for.
what for? You can get something in the mail that says you have been pre-qualified, pre-approved for this card. I
Yeah.
want to give you credit, but it
Hmm.
might be because I see your utilization is so high that
Hmm.
as a bank, they might be thinking you want this card because you want more debt. And what we have to keep in mind all the time is credit cards are not free money. Credit
Nope.
cards are a debt. You
Yes.
have to pay what you spend. And credit cards, because they are revolving debt and usually
Hmm.
they have variable interest rates, can
Yes.
multiply the debt that you acquire in as little as 3 months. You can owe double of what you actually spend. So are you ready to pay that much money for borrowing? Like
Yes.
you have to pay it. You use it, you pay it. You use it, you
Yes.
pay it. That's the only way to show that you're financially responsible and not spend a lot of money financing purchases that if you didn't have the money, you shouldn't have
Yes.
made.
Yes. Like you're talking about interest rates. Did you know you could lower your interest rates? Did you know
On
you could
what?
do you know you could call your credit companies and lower your interest rates?
Well, I don't have that.
No, just if say you have a credit card and you just want to lower your interest rates, and you just take that chance to ask them if they could lower your interest rates. You could do that, right?
No. Oh, actually, I want to ask you something that I heard on TikTok.
What?
If you have a credit card
Hmm.
and the credit card has an annual fee, I
Hmm.
heard that you can call the bank and instead of closing the account, you can ask them to downgrade you to a card that doesn't have a monthly fee that the bank offers. So they will keep the same account number under a different card
Yeah.
that doesn't have a yearly fee. So it doesn't count on your credit as a closed account that doesn't look good and lowers your.
Yeah, but you have to have the payment history. You
Okay, so
have to
here we
be with
go
them.
again. you have to have shown that you are good.
And payment
So
history.
again,
So
yeah.
like I was saying about the interest rates. So what you would do, say you have a good credit card, you've been with them for at least 5 years, and you're like, man, my interest rates is pretty high. Call the credit company and be like, hey, be like, I've been with you guys for 5 years, and I have another credit card offering me a lower interest rates. And I really like your guys' credit card, but your guys' interest rate's a little higher than that. Is there any way you can lower it? I mean, I've been with you guys for this many years and my payment history is good and this and that. You got to be really good history with them. And then you send them that letter, you talk to them on there, and I seen a couple of people do this where their interest rates was lowered because they were with good standing with them.
Well,
Payment
if you think
history,
about it,
always on
related to
time.
my industry, right? So let's say you want to
Uh-huh.
refinance. What are we gonna be looking at? You already had a mortgage debt.
Hmm.
I want to make sure you don't have lates. And if
Yes.
you ever had lates, there was like no more like than one for more than 30 days.
Yeah.
Like I want to make sure that you pay on time. And like you mentioned right before, the 24 months prior are the most important. And
Yeah.
then the 12 months prior to right now, those are the most important. So
Yeah.
on-time monthly payments, I think it takes a 35% is because it's so important to tell the bank,
And lenders.
this is who
Hmm.
I am. This for
Hmm.
12 months, this is the
Got that
person
right.
I have been. So don't think like, oh, I have that credit for 10 years. It's gonna take a million years to fix. So I won't do it because it's gonna take too long. No, because we're gonna be looking at 12 and 24 months. So in 2 years, you can have better credit if you do everything you have to do. You can place yourself in a position of, hey, those bad 10 years are behind. Look at my 24 months. Look how hard I have worked on improving my credit profile. Like that's what we're
Yes.
gonna be looking at.
Yes. See, a lot of people don't understand that. They think that you can repair credit once it's messed up. It's going to be a process, but get it done. That's all that matters. What are you gonna do when you want to rent a home? What are you gonna do when you want to buy a home? What are you gonna do when you need a car and you don't got a car to take your kids to school? What are you gonna do? Like credit is important to get it approved. You should think about it like, look, credit. I need to fix my credit for my family or for my kids and for myself. But
Mhm.
mostly your family should be first. You should always think about your family because you want to make them have a good life. You don't want to be struggling and have them struggle too because you don't want to get your credit repaired. You don't want to, fix your credit so you guys could get a nicer home or a nicer car or, something like that. And I wish people would think of it like that because when I bought my home, what I thought about my credit and my significant other's credit, I was like, we got to get our credit fixed. If we want a home, we got to make sure our credit's A1. He has to make sure his credit, was low, but it's up there now. Mine was always good. I always had good credit because when I was young, my parents, they had credit cards and they used to buy cars and had everything. So I would be like, oh, okay, credit is life then. I see them with all their new cars. The reason why they got their new cars because their credit was good. So if I never seen that, I would have never knew what credit, how important it was. It was all
Yeah,
because of my
and a
parents.
lot of people don't get that. A lot of people actually get a bad example of credit, like borrowing when you don't have how to pay for it, accounting with money that you are supposedly to receive in the future that you never get, and then that debt on the credit card grows and grows and becomes a collection. So when that happens, I want to say that whatever happened with your own credit because of the
Yeah,
lack of information is partially not your fault because you didn't have the tools, you didn't have the knowledge, right? But
yeah,
this is the tools and this is the knowledge. Like after this moment that you have heard everything that you can do to build and improve your credit, there's like no reasons to say I just didn't know. No,
yeah,
now you know. So
yeah.
you have to take a step to fix your credit and improve your life now.
Yes, exactly. Right, let's move on to the next slide. Okay. Good credit. Like I said, having both revolving installment credit makes for a perfect dual because the two demonstrates your ability to manage the different two types of debt, mortgage, 2 to 3 credit cards, or even student loans. So
Okay.
remember, I told you the mix of credit is a big thing in credit. It helps your credit grow higher in a credit score than somebody would have just credit cards under. If someone just has credit cards and don't have another mix of credit, then their credit will stay maybe about 6 to 7, the highest 7. They won't go any higher because they don't have that mix to demonstrate, to show the ability what they can imagine.
Well, something very important, when you are trying to buy a home or applying for a mortgage loan in the near future is before opening any type of accounts, talk to your mortgage loan officer because a monthly payment, which is what we consider against your income, can really steal your ability to purchase a home or a particular home. So having installment debts to be paid in short periods of time make the monthly payment bigger. So
Mhm.
that bigger monthly payment can steal away the opportunity to qualify for a home. So before opening an account, I know we want the credit to be the best it can be, but maybe we can just stay at 700 and shoot for that 800 after we get the house. Just
Yeah,
because
yeah,
that
that's what.
monthly payment can steal your ability to purchase. Just a quick comment there, like FHA loans from 580, um you can put 580 credit score, you can put down 3.5%. Conventional loans, the rule is 620, but to get approval you need to have better than 680. So if we get to the 700s, we actually have the option to go both ways, and depending on the rates, you might see more benefit going FHA, you might see more benefit going conventional, but a 700 credit is a great credit to qualify for both in good terms.
Yeah.
Great will be 740, but 700, that's like good credit.
So 2 to 3 credit cards are good to have. So when they do, their credit's good, their credit's fixed, and then when they do get that mortgage loan from you, that would help mix their credit, make their credit better too because of the mix of the credit. So a mortgage payment, I mean, a mortgage payment is not going to damage your credit at all. It's going to help your credit actually, especially when you already have a positive credit history established with your credit cards and all that, because it's that mix of credit that you're demonstrating, you're managing, and that is showing the credit bureaus that you got a mortgage, you got a credit card, you got maybe a student loan, who knows, or whatever. It's just a part of be able to manage it. That's how the credit bureaus are
Yeah,
seeing. They're
yeah,
like,
but let's clarify here that sometimes when you get that mortgage, the first month after you get the mortgage and it gets reported, your credit score might go down a lot of points, about 30, 35. That happened to me. I got scared.
oh, okay.
But after I made 2 payments, it should back up like
Yeah, yeah,
double.
that's
So
normal,
that
but
we go to the monthly payment again, on time
yeah,
payment.
yeah, but how's your credit now that you got your
Great,
mortgage payment, your
great,
credit cards and
great.
all that stuff? You
Better,
see?
even better than it was
Yes.
before.
Mix
And
of
I believe because the balance of debt increased so much, because I just had 2 houses, it went down. But after I made my two first payments, it should back up and by way more. So
Yeah.
it was a temporary decrease and then a big increase.
Yes, that's a part of mixed credit. So let's
That's
go
great.
on to the next one. 3 types of low credit. A lot of people don't know what types of low credits are there. There's some that know and there's some that know. Like bad credit. Like what is our bad credit? Is late payments, collections, charge off, public records like bankruptcies, evictions, all of that. Child support, all of that. And we help with all of that so you don't have to worry about none of that. It could be up to 3 to 5 years old, we still can help you dispute that. Remember, if it's been over 2 years, we can dispute it off your credit report. So that's good. And the high balances. A lot of people don't know how to balance their credit. So that's another thing that's in the types of low credit. It's a high balance. Student loans. People not paying their student loans, or student loans being too high. They're not paying their payments, or their student loans too high. Their credit cards are too high, so that's a high debt too. That's calculated as a high debt. Store cards, small loans too is high debt. And no credit. Younger earners, people, the kids that grow up to 18 years old that don't have credit, no credit history, wiped out credit, old bankruptcy, that's no credit. Like, some people are on here that don't have no credit and they're zero, and they're like, how do I get credit? Secure credit card. Secure credit card. So I'm going to say that plenty of times, because that's important to grow your credit, because that's the only thing that you're going to get approved of. Because if you go for a credit card and you ain't got no credit, you're zero, they're going to deny you
How
right
are they
away.
gonna,
Right
yeah,
away.
because no
So,
credit. How do I
yeah.
know you're gonna pay me?
Yep. So a secure credit card will be the best for you to start with no credit. Next. Damage points. How mistakes affect FICO credit score. Look at all these look at how maxed out credit cards, what it could
Wow,
do to you
that's
after
terrible.
680 scores.
That's terrible.
Yeah, the more higher, the more points you get taken out. So, like, you have a 700-800 credit score, look what you're getting, look what they're taking out of your credit, because your credit's so high. But if you have a low credit score, look, they're still high, but it's not as high as a 700
Yeah,
credit score.
but 80 points of your credit, that is a huge hit. That is the max out credit card. That is what takes you from qualifying for a mortgage to not
Yes.
being qualified for a mortgage. 30-day late
Yes.
payment, being qualified for a mortgage to not being qualified for a mortgage. It's like, these are a lot of points.
Yes, especially the 30-day late payment. Look at the 700 credit score, what they have to deal with just one late payment.
So I get people always telling me, but I had the money. But you didn't pay. So it's
Yeah.
not about having the money. It's about paying on time. Those are two different things. The bank is not asking you, do you have money? No,
Yeah.
it's pay me. You owe me. So it's paying on time. It's not about having the money. The bank doesn't know. One bank doesn't know you have money in another bank. And even the same bank, if you have money in your other account, but you didn't pay that card, they cannot just take the money and put it towards the card unless you schedule your automatic payment. Like, you have to pay on time. Look at that. 60 to 80 points, 900 to 110 points. That's like
That's why when
mind
you get
blowing.
clients that have 400 to 500 credit score is because of late payments. That's most of what happens. The late payments are like the main thing, or if not, it's the credit card collections.
But I think
Collect
people just don't know, so they make the mistake because they don't know that you are as a credit specialist telling them this
Yes.
is what you're doing is so important. Education is so important. I didn't know it was that much.
Yes. That's why I told you a late payment could be up to 80 to 90 to 100 points depending on your credit score. Look at your debt settlement, less than full balance. Look at that, like 105, 125 points from a 700 credit score. And look at for people that lower credit score, foreclosure. Look at just for getting your foreclosure. That's even higher. Bankruptcy. Wonder why I have clients that have 500 credit score when they start with bankruptcy is because look at how much points you get taken off of. That's why I never suggest bankruptcy to fix your credit program. Never get a bankruptcy because it
No, I never
ruins you.
suggest
It
bankruptcy
ruins
because
you.
after you want to buy a house, it's not only that you're going to have to get your credit after that ding to the point that you needed to qualify. You won't be able to qualify for an FHA loan or a GOVI loan for 2 years after settlement date,
Wow.
and
See,
for a conventional loan, 4 years after settlement date. So
yeah.
it ruins your ability to get that mortgage loan for a long time.
Yeah. And then it's hard actually when that's why I say I don't recommend bankruptcy because it ruins your credit and it's a long process to get it removed. Even if it's charged off, discharged, it's still a process and it damages you so much and it lasts up to like 7 to 10 years before it can fall off your credit. And
Yes.
it's a challenging item that we challenge, but it's challenging for us, but we still get it, we still make it happen, but it ruins your credit. You don't ever want to do a bankruptcy. And then if bankruptcy, it don't repair your credit. Only thing it does, it helps for the debt collectors not to sue you. So you're not fixing anything. You're just not getting sued. That's all you're doing. But those items are still on your credit report. So if you don't get those removed, they'll recycle and you have to pay them.
I have done, just to clarify there, I have done loans on Chapter 13 bankruptcy that are current, as long as
Mm-hmm.
people have 12 on time payments in their
Okay.
bankruptcy, working with their lawyer. It is possible to do an FHA loan for Chapter 13 bankruptcy that is ongoing.
Mm-hmm.
But it's not easy. It's a manual underwriting. It takes a lot of work. The
Mm-hmm.
court has
That's
to
like us.
approve it. You have to prove a lot of things for them to approve it because you are acquiring new debt and you didn't manage well your other debt. So it is possible in that case, but it's really hard. Not a lot of loan officers do it. I have
Yeah.
done it, but
See,
it's
that's like
complicated.
me. Bankruptcies, they're a process, but it could get done, but it's a lot of work. That's why I say don't, if you're in debt, don't ever do bankruptcy. Just go to a credit company, get these items disputed, challenge them. I'm pretty sure they've been sold. I'm pretty sure they're old collections. And debt collectors are not supposed to sell your private information. That's evading HIPAA law. So that's another thing that we pinpoint when we send the letters out too. So you know, bankruptcy, I don't really recommend it. I don't recommend it. I'm not gonna say really. I don't, because I wouldn't turn to that. If I had got, in this situation, I would never go do a bankruptcy. I would just go through a
I don't
credit
think I
program
would do that either.
and just get it repaired like that. I mean, if it's a process up to a year, at least I'm not going to be in a bankruptcy where it lasts 10 years. I can do a year of fixing my credit, or maybe 2 years, not to wait 7, 10 years, because bankruptcy takes time. When you file it, all of that stuff, it takes time, to hit your
Oh,
credit
and
report,
money, and
all that
money.
stuff.
You have to pay
Money too,
somebody to
exactly.
represent you, all
Yes,
that.
yes. And it takes time, so it takes extra time to to get that. It's just not recommended for me. So just don't ever do that. Talk to me first. I could give you the way out of this. Don't do bankruptcy. And if you talk to people that did bankruptcy, they will tell you don't ever do it. Okay, so next slide. What impact has one missed payment? Three factors determine how much it will affect your credit score: how long ago the late payment was, your credit history, your credit score, how severe the late payment was. Estimate that one recent late payment could cause as much as a 180-point drop, depending on your credit history. Remember that? And the severity of the late payment. So, like I said, I always want to talk about late payments, because that's the number one thing. That's the number one that clients get bad credit from, is just a payment history that makes a collection. That's how you get collections: when you miss payments, you don't pay them. All right, next slide. A lot of people always ask me this: why did my credit score drop? Another one. What's the first one, Carmen?
You miss a payment. It's always that.
What's the second one? Utilization, spending the credit limit. Derogatory items were placed on your account. Your closed old credit counts. And like how it says, your closed old credit accounts. If you have, say, you had a credit card and it's closed, and you have difficult payments with them, right? Don't remove that, because once you remove that, that's your credit history. Your credit score will drop from that. So just keep it there. If it's a closed positive account, keep it there, because it's your credit history. It's if
Okay.
you remove that credit history, your credit goes down. So that's another thing too. You recently applied for a new line of credit, like we inquiries. Inquiries are like big things too. A lot of, I know I've seen clients that had 21 inquiries on their credit report because they were
Oh, I
so
have
desperate.
seen.
Yeah, they were so desperate for a line of credit, for a credit card. And I told them, do you know you could just get a secure credit card, build it for like 4 to 6 months, and then move on to a credit card? Because once you do that 4 to 6 months, you'll be able to grow some little credit history with that, and they'll be able to approve you for your credit card. And they're like, no. I'm like, yeah, you can do that. You can do that. All right. So next one, you paid off a line of credit or loan. That's sometimes it happens. Sometimes if you pay a credit card, a line of credit or loan, sometimes it happens. Your credit score will drop from it because it's paid off. It just, it depends how the credit bureaus score you, and that's something they score with sometimes, and sometimes it goes down. It
You did
depends.
all of them. Like,
Mm-hmm. Yep. Okay, next one is credit time clock. Statute limitation of credit reporting. Maximize the items can appear on your credit report. Charge-offs. That's what I'm talking about. Charge-offs. 180 days plus 7 years after first payment was missed. So that's when you will receive a charge-off. A lot of people ask me, when would I receive a charge-off? That's when you receive your charge-off. And the charge off usually is when the creditor sold you a debt and took a tax write off for pennies. And then coming after you, which is illegal because they're not supposed to be having your private information sold. So that's a
charge-offs don't count for mortgage debt, so they can mean your credit and probably affect your credit. But when a debt says this is a charge-off, or a charge to profit and loss, it doesn't count against the borrower. So yeah, it might affect your credit, but at
oh,
least
okay, cool.
it doesn't count
At
against your
least
income.
yeah. Okay, cool. That's cool for everybody to know for the mortgage. All right. This is credit reports and monitoring. I put credit report, I put freecreditreport.com because everybody needs to go on there and at least get a credit report to know the accurate of their credit report and score, and see if any errands or anything that's not supposed to be on their credit report that's not theirs, or just anything that's bringing their credit score down, just to know, and they can get an idea, and they'll be able to reach out to maybe like me, a credit company, to see what they can do and what steps they can take, and I can show them. And I put Experian, a part Experian, because Experian, remember I told you Experian is your FICO score. Your FICO score is what everybody looks at, like your credit cards or anything like that, because that's your accurate score. That's your FICO score. Then your Advantage. Your Advantage just gives you an idea. That's what Credit Karma offers. That's why I always say Experian. I never look on Credit Karma for myself. I always be on Experian because Experian is accurate with your credit score. So yeah, so I'm just giving a little example of credit scores. This is a client that I had. His name's Dexter. He started with my program like about 6 months ago. He was in the low six, almost like about 590, like six almost. I'm thinking, yeah, I'm remembering actually. So he had collections, he had all of that, but he just listen to what I said, he did the steps. So look at his credit score now because of listening of how to get 800, and the 805 is my credit score. I just had to show what I did for him to get him at 831. I helped him remove some items off his credit report and build positive credit at
I
the
think
same
that says
time.
a lot about you too. Like you're helping people, but you are proof that what you're doing and what you know and your program works. Like you have great credit, you have 800 credit. So to me, if I'm gonna trust a loan officer, right, I want the loan officer to have experience the purchase process. Like,
Yeah.
do you know what is to be on the borrower side? Do you know how that feels? What I wanna hear, how this feels so heavy because it's the biggest debt I am probably going to acquire in my whole life. I know that. I know I
Mhm.
have done it twice. Like
Mhm.
I want to provide clients with an excellent experience based on what I live. And I want to do for them being on the other side, knowing how it feels to be on their shoes, like in their shoes. Like you're nervous, you're scared, you don't know what's gonna happen, what comes next, like when do we sign? Like I know that I was there. So I wanna help you now try navigate that and feeling confident and comfortable. Somebody got your back, that's me. I am congratulations, your credit score is beautiful.
Thank you. Yeah, it's like you said, it's work and it is work. I didn't do this overnight. I did this when I first got my credit card. I just I grew it like this. And then this is with a mortgage lend. This is what I have a student loan, but it's with that and a couple credit cards and my payment history. This is what payment history can get you to. A lot of people think that payment history is not important. It is. And your credit
Most
usage, as
important.
you can see in the bottom, my 5% credit usage is what I have of all what I'm using. And it's only what, 700 and something of credit
I
that I
am
have
gonna
out
be
right now.
checking my free credit report today. I wanna see what my credit usage is now. I'm curious.
You can always go on Spirit and it shows you it.
I will check.
Yeah. And then you see his at 14%. Remember, I told you don't go over the 30%. You see the difference when you stay in the low credit usage, what your
Mhm.
credit score grows from. That's why I say that it's very important to monitor this because then you can be able to grow your credit when you monitor this because you'll know your credit usage, your utilization, your payment history, all of that you need to know. And this is what can help your credit score. And this is why I wanted to show you guys that this is what we got to monitor every month to make sure our credit is going good and make sure it's growing and make sure everything is going how we want it and how we're trying to get it to. And it was a process and it's not an overnight fix, like I said, and it was a process to get to 800. And I told myself I'm gonna get to 800, I'm gonna get to 800, and I did because I worked really hard. I make sure my payments are on time. I make sure I get alerts from my phone when my payments are due. I make sure all of that. Like I make sure all my payments are due, and then because remember, my man, I significant other, Adam, has an authorized user, so he depends on me. So I got to make sure my credit's growing so his credit can grow. Because he trusts me. I added him as an authorized user, and his credit score is going good too. So this is just a sample of 800 credit score. You're exceptional. So yeah, just always monitor it, and that's you'll be fine, and keep that credit usage low. All right, let's go to the next. Okay, this is a little free game I was wanted to give everybody. So let's start our kids young. Let's start growing their credit, but make sure your credit's good. Make sure you're on your time payments and your credit's growing positivity every day. So your kid can have good credit score. These are banks that will let you add them as authorized users. I added my daughter as an authorized user for my Sears credit card, and I've been using it, little by little just to grow her credit because I want her when she's when she's 18 to have, some credit established. And then if she needs a little more, then I can just show her like, look, let's get you a secure credit card, start building your credit. So when she gets older and she does want to, apply for school or apply for a house to, rent or something, she would be able to be approved for it. Why not
That's a
start your kids
good
young,
idea.
Why not show them how credit is? We're not taught this in school, so why not educate our kids and put them on an authorized user?
However, do not do this if your credit is not good, because
Yes.
we want to make sure the credit they're gonna get from you is good credit. We don't want to
Yes.
damage your kids'
Yes. Yes.
opportunities.
If
Your
you're
credit
not
has to
reliable,
be
yes.
good. You have to be good. You have to be responsible, great credit, so they can get that history from you. No bad
Yes.
history, good history only.
Yeah. Yeah. So if you know you're bad on your payments and you're not always on time, I don't really recommend this for you to add your kid yet. Until you get into the motion where you can pay your payments on time and learn and get that, up to date where you can be able to grow your credit and then be able to establish your kids' credit after. Just work on yourself first. If you know that you don't have good credit and you're always forgetting to pay your payments, start working on that. Start putting a calendar, start doing automatic payments, start doing all of that stuff right now to start getting into good credit habits, because the credit is very important. So yeah, so you want to be able, if you want to put your kid in there, must have good credit. Next one. Yes, so this is a little about our company. We're a risk-free credit repair service. We don't believe in repairing and doing people's credit if we ain't going to get items removed or get any results. So we offer this free risk credit repair program where you get 180 days in our program. If nothing has been removed or deleted or anything, collections, nothing been disputed, within them 180 days, we give a full refund, but wait, we have a catch. Payment history. You must make your payments on time to be able to
Makes
qualify for
sense.
the full
Makes
refund.
sense.
So that's what we offer. So there's no risk of paying for service that don't work, okay? We will give you a full refund if you don't see any results. Right there for you.
After you do what you need to do,
Yes.
because you need to do the thing.
And this is our build personal credit. This is what we help with our dispute. This is what we also have my dispute powerful software. That one is where you do it yourself. If you are kind of familiar of all of this stuff, then this will be recommend the one at the bottom. But if you're not, we do everything for you. We send out the letters for you. You have your own portal to be able to see deletions, credit increases, what's been disputed, what has been removed, anything like that, so you won't feel lost or anything.
What website people have to visit to get that? Creditlights.com?
No, I would have to send them my application to get started so they can have their application, because if they were to do it, they can't get in it there. So I would have to send them the application.
So in order for people to do that, they have to contact you where?
They can. I'll put my numbers in the chat. I'll put my number in the chat, and they can send me a message saying credit if they want to help, or if they want more information. Just put more information, and I can share some more information if they need to know anything, any questions they need to know.
Well,
But
if you need to get a hold of Jesse and you are like, I cannot find the information, where do I put the, just reach out to me. I will forward your information. I will give you her number, and then you can get started with this, because the best day to buy a house was yesterday. The best day to buy a house is today. The best day to fix your credit was yesterday. The best day to fix your credit is today. So you need to reach out today and get on it and do what you need to do, because it doesn't matter what your credit is. There's room for improvement. And if it is really, really, really bad, there's a lot of room for improvement, but it's not going to happen until you take action. So contact Jesse, contact me, and I will put you in, in contact with Jesse, and you can get this done like right away today.
Yes. Yeah, and then they get their own portal, so they'll be able to do budgeting on there. Like I said, how you have that 1 million fraud insurance, you have a score booster utilization manager, you have text and email. We give you text and emails, credit monitor alerts, and we send 3 monthly disputes out to the credit bureaus, all 3 credit bureaus every month till these items get removed off your credit report. We have credit building resources. Like I said, we have secure credit cards. Um, and then we have trade lines too. You can add trade lines, stuff like that. Customers, we have customer service. You can call anytime, any questions, stuff, all that good stuff. Budgeting too, because a lot of people don't know how to budget their money. That would be good for them to add that budgeting, well, to use that budgeting tool to be able to pay their payments on time as well, because they could put
Definitely.
that in there too. So yeah, so we offer a lot of things to help your credit grow. You see all this stuff that's on there, it's all helping you build your credit while we're disputing items that are bringing your credit score down. So
And
you
it's
got,
no saying. I don't want to say like, oh, it's no money. It has a cost, but what you're getting for what you're paying is nothing. That is
yeah.
less than 10 grande Starbucks. So like
Yes.
10, maybe about $7 a drink or something like that. So it should be less than 15. Let's say about 15. So if for 15 Starbucks you can fix your credit, like, is it worth it? I think it is. What you can get in return for that investment, don't call it an expense. Expense are things that don't give you a benefit. Investments are things that give you a result, a return. This is an investment. Having better credit is an investment.
Yes. Investment to your future.
Yep.
Because if you don't do this now, when are you going to do it? Like you're
No,
going to
it's
say, oh, I'm going
today.
to do it
There's no
next
more
week.
options. There's no
Yeah.
tomorrow. There's no next week. There's no next month, next year. No, it's now. Just do it
And
now.
there's multiple companies out there like Lexington. They got sued for doing wrong practice of credit. And if you look in their comments, there's so many people saying waste of money. And I have multiple clients come from there. I'm not trying to talk bad about them, but there's out there credit companies that don't care as much as we do. Like we're giving this monthly, this 180-day risk-free guarantee, as long as you pay your payments on time, which is most important as of anything, you know. And there's companies out there that are charging $15 to $1,000. And I'm gonna tell you a little story. Before the credit company, until I got into it like about 4 years ago, my significant other tried to join another credit company, and they took $1,500 from him and they ghosted. And it was a company. It was called Identity Q.
Oh, wow. That's a
Yeah.
lot of money.
Mm-hmm. And then when after that he joined my credit program and he got his credit repaired because he he was, that's when we bought our house. And a lot of credit companies out here are just out for the money, and we're not out for the money. We're trying to help people reach goals. We're trying to find the ways they can find to reach their credit goals. We're giving them budgeting. We're giving them 180-day risk free. We're giving them education through it. I'm educating everybody through this while they're in my program, and I'm helping them build their credit from 0 to up, or from 4 to 600. There's not people out there that are doing that. They're just enrolling them and letting them, just sit back, or not even letting them know what's going on. And us, we do it down to the T. We're letting you know. We're giving you a $1 million fraud insurance. We're giving you daily credit monitor. You get score your track, you could score your boost, there's a lot of things we're offering, and there's a lot of companies don't offer that. They just offer credit repair, and then they just want the money and the monthly payment and sit on your credit. There's credit companies out there that will say they delete stuff, and then when you leave their credit company, it comes right back on their credit report, or their credit score goes down for them leaving that company. Yes, I had plenty of clients that too. That's another thing, because I had a client ask me, so if I cancel when I'm done, is my credit score gonna go down too? Is my lines and my credit, my debt gonna go back on my credit? And I'm like, what? No. And then she's like, well, this other company and this and that, I went to there, and when I left, my credit score went down, and then the debts went back on there. And I'm like, what? Like, yeah, there's credit companies out there just want your money. And us, we're not all about that. We're trying to help you guys reach your goal. That's our passion, to help you guys reach your goal and get you qualify what your goals are. Because sometimes, every time I ask somebody that wants to repair their credit, I always ask them, what is your goals for this? What do you want to do? What do you want to accomplish? Because I want to focus on that for you. I want to make sure that you reach that goal. But if you don't listen to me, then it's going to be a little difficult. But if you listen to me, it'll be a piece of cake, and you'll be able to reach that goal to whatever you want, a house, a car, stuff like that, business loan, personal loan, something like that.
A
I'm going
job.
to
I
help.
had a client that couldn't qualify for a promotion at work because of the credit.
Yeah, see?
When you are involved in financial services, like, it is important that you have good credit.
Yeah. That's yeah, jobs too. Yeah. I had somebody reach out to me about that too. They're like, hey, I need you to help me fix my credit. And I'm like, okay, yeah. And they're like, because I'm trying to apply for this job and they're checking my credit. I said, oh, yeah, I know. There's jobs out there that want to make sure you're,
To be a mortgage loan officer, you have to have your credit checked. Like, it is
oh, wow.
important. Like, well, you're dealing with people's financials
Yeah.
and credit profiles, and like, let me see what you got in there. Is there any fraud? Is there anything suspicious? Anything bad? Like, the credit says a lot about a person. So if you don't
Yeah.
have the best credit, it doesn't mean that you're in the best person, but it doesn't hurt fixing your credit and showing people like, yes, I'm a person that gives importance to my monthly debts, to my obligations. I pay my things on time. This is a person I am financially. That's what your credit says.
Yeah, and yeah, like you said, jobs is, people don't think jobs do it, but when they get the job, or when they want the job they want, and they're like, oh shoot, you check credit. They want to make sure you're honest.
Well, think about it. If you're getting a job as a truck driver, don't you think they're gonna check your DMV record?
Yes, of
Like,
course.
if you're involved in financial services, they might check your credit.
Yeah, of course, yes, because it's important. Credit is important. A lot of people don't understand till they really need it, like you said, and that's true. That's
So the
really
time
true.
to work on the credit is right now.
Right now, if you want to be a homeowner, right now, you want to own a car, right now, you want to open some credit cards, right now, you want a personal loan, business loan, right now. Like, yeah, like when people are trying to get business loans, they're like, why I can't get a business loan? You could get a business loan if your credit was good, or if you establish your business credit too. That's the number one thing too. You got to establish
And you
business
help with
credit.
that too, right? You help
Yeah,
with business credit? Great.
business credit, personal credit, business loans, personal loans, all that good stuff
Awesome.
that can help the
Any of
person
that,
grow. See,
check
that's what I'm
in
saying.
with
I got
Jessa.
a lot of services that can help people grow. Debt relief, like I said, debt relief is a big thing in this life. A lot of people have debt that they're struggling, they can't pay, but they're paying it, but they can't pay it. And what our company does, we cut your payments in 50% in half. So and then it adds to your credit report to grow credit history. Come on, I mean, that's a game changer right there. You're getting a loan to pay, getting your payments cut in half, and you're adding it to your credit report, growing credit while it's getting
You know,
reported.
this topic is so interesting that I think we have almost 2 hours talking.
Oh, wow.
Imagine that.
Well, that's how important credit and mortgage is, you know.
Yes.
Where it's very important. A lot of people need to understand it's very important in this life. It's, you know, you need all of that. You know, we all want to buy houses, we all want to invest into our lives, you know, especially when you buy a home. You want to be able to buy a home and with good credit and a good interest rate and get the home you want, you know, not the home that you can qualify for. Get the home you want. Push a little more, add a little income, push more credit, you know, go a little longer, you know, with your credit. You know, there's a lot of ways that you could do it. And you want to be living that American dream because you want to be able to have something for your kids later too, to have that house. So
Yeah.
when you leave, they can have leverage your home. They can probably take a loan and get a little
Or your retirement.
apartment
Like you're
complex.
gonna be paying rent once you retire. With
Yeah,
what income?
exactly.
Social Security
Yes.
income is not enough to pay for rent
No, I
and
know
living
that.
expenses.
Yeah.
So what about we buy that house now, pay it off in 30 years or less? And if you add a little bit more principal every month, you can pay it faster. And by the time you retire, your house is gonna be paid off. Now you
Yeah.
just have to worry about your living expenses. It's like let's work on a plan for the future. Like let's help
Yes.
your kids live their life and
Yes.
not having to worry about supporting mom and dad. Let's build that for yourself so they can worry
Yes.
about building their own lives. So it's like that's part of being like in the case of people that are parents, like part of being a parent is not only providing for them now but setting yourself for the future so they can go and do their lives too, you know.
Yeah.
So let's buy that home right now so we are ready by the time we have to retire.
Yeah. And make sure, and another thing, I know this is off topic, but make sure if you do buy a home and you have a lot of assets to put it in a trust because it will save you for going to probate court. Put it in a trust. Put it in a trust, and whoever's your you know, the one that's in charge of,
Beneficiary.
yeah, beneficiary, you know, but make sure it's the one you trust. They're the only ones that could touch it. Not even IRS could touch it. Not even the government could touch it. Nobody could touch it but the beneficiary. So you
Well,
want to
but
protect
let's
it.
start from the beginning. Credit. Credit,
Mm-hmm.
credit, credit. Let's
Mm-hmm.
talk about that later once your credit is all good and we're getting the house. So for now, you have to contact Jessa because you need to fix your credit.
Yeah, we could talk about that later. Yeah, because that's another topic. But I just want to mention that because
It is important.
a lot of people have assets and something happens to them and their kids are fighting the propane courts fighting, everything's just going
Oh,
bad. And
there's
then,
more on that. I have stories, but we can
yeah,
go
and
here
then
for like
yeah,
3 more hours.
and then if they owe anything they could take their house away. That's why you want to make sure you put that house in a trust. We'll talk about that later, but that's just my opinion, you know. And I help with that too. So if you need a trust, I help with that too. So let's go on to the
Okay,
next
that's
slide.
good to know.
Okay. So this is a little bit about me. This is of all the salute, you know, all the services I provide, but the main thing we're focused on is personal credit. That's the most important in this of being a homeowner or anything. So these are all the services I offer. If you guys are looking any of those services, those are the services we offer. And this is my contact information at the bottom, and it's a free consultation. I give all free consultations because I believe that, you know, people need to speak and let me, you know, speak for themselves so they can, I can understand what's going on and not be like, okay, you got to give me $20 for no, I don't want to do it like that. I want them to feel comfortable and be able to talk to me how long and whatever they need to talk to me about. So that's why I offer free consultations. I don't want to charge nobody for no consultations. But yeah, that's a little bit about me. So screenshot or however you guys want to do to be able to get any of those services. We offer all those services. All right. All right. This is the end of the webinar. Thank you for everybody listening. Thank you for taking the time to come on here and listen to all of the importance of credit, the importance of being able to be a homeowner, all of that good stuff. Thank you for everything, and you guys have a wonderful weekend.
Yes,
Anybody have
it was
questions?
a lot of good information. I think you did amazing. In case somebody's watching this and another point, that's not the weekend. Have a wonderful week. Have a
Yeah,
wonderful day. And
yeah,
remember, you have to contact Jessa. Jessa, maybe you can say your phone number now, and people can text you right away so they don't
yes,
forget.
yes. It is 415-335-6956. That's my business phone number, but my personal number is 209-645-9127.
So if they text you right now, credit, then they would text you to which number? Can you say it again?
Any of the numbers that I have gave out, the 335-6956. That's my business phone number. And then my personal is 209-645-9127.
Okay, just text if you want more information, and yes, I will offer you more information, personalize your consultation. Like she says, she's an expert in credit. You can ask all the questions. I think most questions were answered by the information she gave out here, but just in case you have a particular question about your specific scenario, there's all the information about the program. Maybe you want more information on what the program offers, which is a lot. Just contact Jessa, and I'm sure she can help you out with this.
Yep. I'm here for you guys. I'm here for you guys to reach your goals.
Well, thank you, Jessa.
Thank
We'll
you.
see
Thank
you
you for your
around.
time, and thank you for listening, and thank you for everybody's time and listening. I'm glad you guys were on here. You guys have a fabulous week or weekend or wherever you guys, your time schedule's at. You guys are watching this.
See you later.
All right. See you later.
Bye.